Hello guys, welcome back. So this channel is purely for entertainment and educational purposes only. This is not a financial advice. I'm not your financial advisor. Invest at your own risk. So investing. When it comes to investing in digital markets, the first thing you have to know whether it's cryptocurrency, stocks, stock market, gold, ETFs, whatever you name it. When it comes to investing, there's two things you have to know. One is fundamental analysis, and two is technical analysis. In this channel, I'll be focusing only at the technical analysis, not on the fundamental. Why? Because for me, I prefer technical than fundamental. Fundamental is what people or news say about that specific coin or asset or whatever. Technical analysis is strictly what the charts are saying. So the first steps of investing, when it comes to investing, is understanding what you're investing in, uh, understanding, like we said, the cycle, big picture things. Let's jump in. What I'm going to be showing you is if this step by step how to approach or how to navigate this cryptocurrency market. The first thing you have to look is the big picture. You have to look at investing at long term as a beginner. Why? Because this crypto market is not a race, is not a rally, it's a marathon. So for you as a beginner, you want to invest in cryptocurrency, you have to understand the big picture first before diving deep into the smaller picture. And for you to become successful, you should look at the long term, not short term. For you to become successful, you have to learn how to walk, then learn how to jog, then learn how to run fast. So this is Bitcoin's chart since day one. Since you can see here, you have dates and you have price. You can see Bitcoin has been since early 2009, but available on charts in 2010. So what we'll be looking at is those are the candles which are price action, and those candles, each candle represents 1 month. You can see here it's on the 1 month. So the first steps to take is to understand how cycles work and all the candles you see, the green candles and the red candles. So like we said, each candle represents 1 full month, and open and close. So if you're just looking at this chart, you're going to see some momentum to the upside and the downside, and the upside and the downside. A full history of Bitcoin since day one. Everything you see here is based on cycles. Crypto moves in cycles. And everything you see here on the chart is based on cycles and support and resistance, like we said in the earlier video. So now this is Bitcoin's history. What we can realize here in the early cycle, in the first cycle in cryptocurrency in 2010, Bitcoin rised in price for almost 4 years. This was cycle 1. What you can see here is in the first early cycle, you can see Bitcoin moves in cycles, which is 4-year cycles, not like other markets like stocks and gold and crypto. So what you're looking at here is Bitcoin since 2010. You can see down the date, 2010, July 1, 2010 till end of December 2013 or early 2014. You can see here 2014. This was the first cycle of Bitcoin. If you realize, Bitcoin moves in 4-year cycles. One here, second one is here. Then from 2014 to 2018, that's another 4 years. From 2018 to 2022, that's another December 2021, early 2022, and that's another 4 years. So basically it moves in 4-year cycles. And what we're going to further discuss is the waves to the upside and the downside candles along the way. Green candles are usually bull markets, and red candles are usually bear markets. Bull markets, the prices are going up, bear market prices are going down. So if you realize, since in every cycle, after every cycle 4 years, we always have a crash. Cycle 1, we had a mini crash here in the early days. Here we have a full cycle. Cycle 1, we had a crash. Then we had cycle 2, then we had a crash. Cycle 3, we also have a crash right now going on. So this to dig deep a bit more, after each cycle Bitcoin moves up, then have a crash. Usually this crash in cryptocurrency happens like of an average of 60 to 80% in a bear market. If you realize here, we had a huge move to the upside. We corrected back down roughly 80% in the early cycles Bitcoin. Then we had a huge wave up until December 2013. We had a peak, then also a crash of average of 80%, 81%. Then we moved to another cycle. We peaked also in December after 4 years. Just understand, cycles are 4 years from peak to peak. From bottom to peak, they're a bit less than 4 years. So another peak in early 2018, we had a crash also, average of also 80%. So what you realize, basically here we have also from 69k down to 17, roughly we had a 75% crash. So what you can realize, like we said, after each impulsive wave or a full cycle, you get to have a crash of an average of 80%. So later in future videos we'll discuss about each cycle and how it behaved, and why this current cycle is different than the rest. Hopefully in future videos we'll get to explain that. So basically that's the big picture. You're looking at it from 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 a big lens. So now, you as an investor, the first question, the $1,000,000 question is, okay, now the chart is in front of me, what shall I do? How do I know when to invest or when to start investing? So the next step, we explained the 4 cycle theories for the cryptocurrency market, for Bitcoin, and we're going to be concentrating mostly on Bitcoin because Bitcoin is the king of the market. Bitcoin is the main driver of the market. That's why most of my focus is going to be on Bitcoin, and probably maybe a bit Ethereum, of course, but Bitcoin most because it's the king of the market. So let me remove this. Okay, so now the first thing you wonder is, okay, when do I know when to invest, or when should I invest? You can see price action here on the right side and dates, like we said below. When is the best time to invest in cryptocurrency, or when can you know whether it's going to keep going down or keep going up in price? So the first thing you're going to do is pull up this chart, Bitcoin on the monthly. So now we're done. Now that I've showed you the 4 cycle theory, 4 year cycle theory for Bitcoin's peaks every 4 years, and after every peak there's a crash, there's a bear market. This is called a bull run, this is called a bull run, this is called a bear market, this is called a bear market, this is a bear market, this is a bear market. So now you want to know when to start investing. The first thing I'm going to do is put on the weekly time frame, put the chart on the weekly time frame. Then I'm going to zoom in a little bit. That's why I'm looking at the weekly candles, but we'll look at the monthly candle. So the weekly candle shows you a closer look, or you get to zoom in a bit into the chart. So what I'm going to do is I'm going to pull up, I'm going to come to this section, indicators. The first thing I'm going to put is a moving average. This is a moving average. I'm going to put my moving average, come to the settings over here, settings, inputs. I'm going to put here 200 MA. I want to be looking at the 200 weekly moving average. Press OK. Make it a bit more visible. Red. Alright. So unfortunately this move average is not available from 2010. It's available only from 2014. So what you realize is, here in the price action, since we're looking back at the early cycle from 2010 to 2014, we had a crash here. I'm going to call this a correction. not a crash. Usually crash means a bear market, like a huge amount percentage to the downside. So if you realize, first cycle from 2010 to 2014, our first peak, we had a bear market which started from early 2014 to mid 2015. So usually, like we said, after every 4 years of price action to the upside, we have a crash, and this bear market usually lasts from 12 to 18 months. So after this first cycle, we peaked in December. We had a crash of an average crash of 80%. Where did Bitcoin correct to? It came back down right to the red line, to the 200 moving average. Usually this moving average shows where the bottom can be, where the bottom can come in. So after the crash, we came back straight to the red line. We came here, touched the red line in January. Like you see, we spent a lot of time on this red line trying to create a good market structure. This helps Bitcoin to have momentum and start a new cycle. So it stayed roughly for like 210 days, like roughly 30 to 40 weeks on this line, trying to create a new market structure so it can help us go back to the upside. Usually, a simple term, this red line is where Bitcoin crashes to after every bear market. So you can see bit by bit we started going, after touching this red line, it took us a while to start going up back again and starting a new cycle, which also peaked late December 2017. If you realize, in cycle 2 also, after a crash of 80%, where did the Bitcoin price fall to? Right at the red line. On the red line exactly. If you can see, we touched the red line here with those couple of candles. Also, we spent a while here trying to build a market structure for the new cycle to begin. You can see also we went into the third cycle, which ended some like roughly 6 to 8 months ago. Also, we crashed back down to the red line. Yeah, you might be wondering, yeah, this time around we went a bit down below. Hopefully in future videos we'll explain why Bitcoin is way below the red line this time around, way more than the previous cycle. So basically this is it. So now you get to understand 4-year cycle peak, bear market crash, average of 70 to 80%. New cycle peak, crash, 70 to 80, average of 70 to 80%. 4-year peak, average of 70 to 80%. So I hope we're clear with that.